Hi, my name is Pauline Yong. I'm a licensed financial planner and I'm also a certified chartist. Today, I would like to share with you my thoughts on the 2022 budget. And before I begin, let me do a disclaimer. In today's session, it will be for sharing purpose and education purpose, and it's not meant for recommendation. So let me share my screen. I'll be using KPMG 2022 budget snapshots to do the illustration of the budget. So 2022 budget snapshots. So for budget, usually what we learn about budget is that if we look at budget, whether it is for a family budget or for a country budget, we are looking at sources of income and then the expenditure. So in order to manage well a family, you must have enough of a revenue coming in as an income and then to finance the expenses. So for a country, same thing, we are looking at budget, whether we are running at a budget surplus, whereby we have more income than expenditure, or we are running into a budget deficit. So the budget deficit meaning that we have more spending than the sources of income coming in. So for the country's budget, basically, we are looking at what are the sources of income. The sources of income will be looking at the tax revenue mainly. And then for the expenses, we are looking at the subsidies, okay, the money that's spent by the government to the people and also for the country. So, so we need to balance these two, the revenue that we tax as a income tax or some tax revenue proceeds from the tax, and then need to finance the subsidies and expenses that the government spend for the country and the people. So this year, for this 2022 budget, it is historically by far the largest budget we can see, which is 323 billion ringgit of a budget that we are looking at. So it is understandable because we are actually looking at the recession here. So in any situation whereby, especially when we are coming out from recession and then trying to be recovered, so a lot of money need to be spending in terms of building up the economy and constructing for the recovery phase. Okay, so last year we see that the pandemic has caused some major disruption in the economy, as well as the public health crisis. So this year, we are looking at economic recovery. So I would like to share with you, okay, in this budget snapshot, that our GDP growth for a start. You can see that last year, 2020, we saw the GDP growth rate to a negative of 5.6%. So in our history of our GDP for the past 50 years, since 1970s, there were not many occasions whereby our annual GDP gone into a negative level. So in the past 50 years, we only have a few occurrences whereby the GDP was negative, annual GDP was negative. The major negative was in 1998. Asian financial crisis, where we saw the GDP has a negative of 7.1%. And then this round of a minus 5.6 is the second worst GDP recorded in the past 50 years. And then the third GDP negative was actually in 2008, 2009, the mortgage subprime crisis, whereby we had a negative of minus 1.5% of the GDP. And in the 80s, in 1986, we also saw another negative. It was a negative of 1% of the GDP. So these were the negative GDP that we had experienced. And we can see that this round of a recession, it is considered one of the worst recession we so far we had in the last 50 years. So of course, given the situation, and then we learn from the experience, we learned from the 2008 that whenever we see a financial crisis or economic recession, what the government should do globally, all the government around the world, what they will do is usually to stimulate the economy through the stimulus package. So in 2009, when our economy was suffered because of the subprime crisis, we saw the stock market collapse, and then we had a high unemployment rate. The unemployment rate shot up to 4.5%, and then there were we experienced some economic recession. So in March 2009, our government injected the stimulus package of about 60 billion ringgit at that time, and it was only one stimulus package of 60 billion, and then the economy was revived. And this round, it is different because this pandemic has caused a major disruption into our movement and the mobility and the functioning of the economy, whereby a lot of the businesses we cannot carry out during this period of time because of the virus and also the social distancing. So in the end, we see a high rate of unemployment rate from the middle of last year until this year. We have about the unemployment rate has been consistently at above 4.5% for the past 12 to 16 months. So and also a lot of SMEs, they have to close their business because they cannot function in this kind of an environment. So that is why this round of a stimulus package, the government have to put in a lot of effort. And as we can see, here is the stimulus package that we have put into our economy since 2020 last year. So altogether, we have 8 of the stimulus package here in a total of about 530 billion ringgit, which is accounting for 37.5% of the GDP. And if you to look around, this amount of the stimulus package, it is considered huge, but it is not the largest when we compare to other countries. Other countries like Japan and US, their total stimulus package is even higher than us. But nevertheless, this amount of stimulus package is good enough to recover, to revive our economy. And on top of this, we have the our 2022 budget, which is about 323 billion ringgit. So hopefully with all this budget, we are able to stimulate and revive our economy. Okay, so I will also talk about those budget measures that are in place that will link to our stock market, because after all, the reason for the budget and then to look at the budget is to see what is the effect on the stock market. Okay, so let me scroll down. So here it says that the fiscal injection of the stimulus package. So direct fiscal injection of the stimulus package is about 83 billion ringgit in total for Malaysia. Okay. And because of this, all these stimulus package and also the budget, we are actually looking at higher federal government debt. So this higher government federal debt will projected to reach to 66% as a percentage of the GDP. And well, if you were to look at this 66% of the GDP, if you were to compare other developing countries, this amount is reasonable. If you to compare to developed countries like Japan, Singapore, and US, their federal government debt is more than 100% of the GDP. So, but anyway, for developing country with around 65%, I think it's reasonable. So here are some of the highlights. I will only touch on those highlights that are linked directly to the Bursa Malaysia stocks. Okay, and overall the budget is people friendly. We can see that the government effort is actually to help the poor and the needy and the B40 families. However, another side effect is that we need the revenue. So then the government has to think of ways to tax more revenue. So in this case, I will share with you some of the tax that are being imposed by the government for this round of a budget. Here we can see that, of course, the major thing is this one-off special prosperity tax, Cukai Makmur. And this Cukai Makmur is a one-off special tax, whereby it will be taxed on company corporate for the earnings above 100 million of chargeable income. So if you to look at our Bursa Malaysia stocks, there are actually about 124 companies. As I read from the Edge, it says that 124 companies listed on the Bursa Malaysia that are under this category. So majority of them are the top 30 component stocks in our KLCI index. So there are the banking stocks, the telco, and those large cap, big cap stock. So the effect is that above the 100 million of chargeable income, then there will be a tax rate of 33%. So this will be additional 9% of a tax rate. So meaning that the overall, the effect I have calculated is more or less around the impact for the company for next year revenue or earnings will be around 10%. Okay, 10% of their net profit. So I think as the country is recovering, the company will gain more earnings. So this 10%, it can be easily absorbed by the economic recovery. So hopefully after next year, then the following year, 2023, we will see a more prosperous outlook for the stock market for Bursa Malaysia. And another tax is this one, exemption of the real property tax. So this one will have a direct impact on the properties. So it's a positive impact on the property stocks in Bursa Malaysia, which means that there won't be any RPGT after the 6th year onwards. So before it was 5%, now it's 0%. So this is a good news. So overall, we see that the winners, there are winners and losers for the budget. The biggest winners, I would say that it is the properties and also healthcare, okay, because as you can see from here, so this is the source from the Edge markets. Education sectors is the largest recipient, and the second largest will be the healthcare sectors. So the education sectors here receive the highest allocation of the budget, amounting to 52.6 billion. And then for the healthcare industry, it has about 32.4 billion. So that brings to the next winner will be the healthcare industry. Okay. And another bigger winner will be the automobile industry. As you can see that there is a exemption, tax exemption on the purchase of electric vehicles. And in the past, I've been thinking that the earliest arrival of the EV cars probably is like a big massive usage of the EV car probably is 2023 onwards, but looks like it could be as early as next year. So I think the automobile industry will see a good improvement in terms of their sales in moving forwards to 2022 and 2023 onwards. Okay, and then there's also a tax extension of the sales tax exemption on the purchases of passenger cars. So all this will benefit the automobile industry. And another sector that also benefit from this budget is the tourism sector. So tourism sector, whereby we are looking at the entertainment duty exemption plus 1 year. So what are the tourism sectors on the stocks that are related? So we can see that they are the Genting Malaysia, and then airline industry, AirAsia. So this will definitely benefit the leisure and the tourism industry sectors in Bursa Malaysia. Additionally, we are looking at of course, as I said, this budget is people friendly. So we can see that a lot of the allocation or the subsidies are given to the needies. So in terms of the personal tax relief, there are also a number of schemes here as well. Overall, the biggest winners will be the automobile sectors, the tourism sectors, the healthcare sectors, and technology sectors, and also renewable energy sectors. Okay, whereas the losers, I'm looking at the plantation, because the plantation has a tax over here. Let me show you. Okay, so there's a windfall profit levy threshold for the crude palm oil prices to be increased from 2,500 ringgit per ton to 3,000 ringgit per ton for Peninsula Malaysia, and from 3,000 per ton to 3,500 per tons for the Sabah and Sarawak. So this will affect the plantation stock. So this will be the biggest loser for the budget, which is the plantation stocks, and also the large cap stocks such as the banking and the telco stocks, whereby although the next year in terms of their P&L, it will be impacted around 10%. However, it does send a bad sentiment or weak sentiment into the stock market for next week. So next week, I would expect that the stock market will react volatile a little bit because of the major blue chip stocks. They are linked with the prosperity tax. But however, I do see that there is a bottom. Whenever there's a sell down, it's always a good opportunity to accumulate good quality stocks. So perhaps when you see the banking stocks is being sold down next week, then I think it will be perhaps a good opportunity for you to accumulate the banking stocks. I think that's all for today's sharing session. And I am looking at the support level for next week for the KLCI index is about 1540 and the resistance is about 1580.